we're trading over $70, just around $72 now. And that's pretty much at the top end of the risk premium that a lot of analysts have been talking about, somewhere from $3 to $10, and we've been seeing that priced in over the last few weeks there, and so we're kind of at the top of that level, based on where we started when this came in. And that's pricing in the risk of some sort of action going on. Most of the analysts that we've been hearing from will say that if there is an actual interruption to oil supply, we could stand to spike even higher than that. Of course, the market will react, as we saw that reaction in June when people were concerned. There was a more domestic-focused Iranian gas plant that was hit, didn't affect imports, and then prices came back down. So people will assess what's hit, whether that hits production or any export capacity or any of the other Gulf countries, Jumana.
Okay, so let's talk about the potential OPEC Plus response to all of this. And in the hypothetical situation that oil infrastructure in Iran is actually hit, and we see that spike upwards in oil prices, over the course of the last year, OPEC Plus have actually put back more than 1 million barrels back to the market. How much spare capacity are they sitting on right now, should there be a need for them to come back in and supply the market with extra barrels?
Yeah, that's a good question, and the answer is that it's tight. Saudi Arabia is pumping around 10 million barrels a day, and their alleged capacity is 12 million barrels a day. Their sustained long-term capacity. So that leaves roughly that 2 million barrel window there of spare capacity that the Saudis could bring on, and it's pretty much the Saudis that have the spare capacity. The UAE's OPEC production quota is much lower than their actual capacity. There's a lot of speculation in the market from analysts and traders that they are actually producing much higher than that. So the question mark is around how much spare capacity they actually have. Kuwait's got some, but they might be slower to ramp up. So it's really Saudi Arabia. And then the risk is, if there is an attack on Iranian infrastructure, do they then try to close the Strait of Hormuz? Do they try to strike out at some of the other Gulf exporting infrastructure? And could that then hit exports? Of course, Saudi Arabia does have a transnational pipeline that runs from the east, where most of the fields are, to the west, where they have the Red Sea. So they can export some oil through there. Of course, that oil pipeline then creates another target. But they do have that capacity. The UAE also has a pipeline that runs to Fujairah, which is on the Indian Ocean side of the UAE, but it's also quite close to the Strait of Hormuz. So there's a lot of assets there, but those assets then, in a broader war, the risk is that they become target, and that's what the concern that we're seeing a lot into that oil price so far.